Hey guys, and welcome back to another video on my dividend investing channel. I really appreciate everybody that showed support on the very first episode. If you haven't watched that, please go ahead and click on the link. I really appreciate everybody that showed support. And before we get into the video, it'd really mean a lot if you dropped another like and hit the subscribe button below. As I mentioned last week, I'm going to continue to shout out everybody that subscribes and follows me on Twitter, so go ahead and do that and your name will show up on the next week's video. As I mentioned again last week and for all the videos going forward, I am not a financial advisor, so anything that you do in the market, please reach out to a financial advisor before spending money in the market. These are just my opinions and my opinions alone, and I just like sharing them with you. January 2021 is finally over, so that means I will be giving an updated review of my dividend portfolio. I just want to discuss some of the things that happened in my portfolio over January, such as the activities of receiving dividends and reinvesting in them, a new company that I actually invested in, the portfolio summary and performance, and then a look at my updated portfolio as of February 1st, 2021. So first on the list is looking at the January activities, such as the dividends that I received and how I reinvested in them, as well as the new stock that I invested in. So looking at the dividends first, you see that I was paid a dividend by Realty Income and Bank of Nova Scotia. The dividends that I received from Realty Income, or stock ticker O, was $1.14, and Bank of Nova Scotia paid me just 97 cents. I have an asterisk next to that because there was a tax taken out because they are an international company. So with Realty Income, if we look down at the next or the bottom portion of the slide, it says new purchases. So with Realty Income, I actually purchased $1.14, or what the dividend I received, back into Realty Income and purchased just 0.02 of a full share. It's not very much, but it'll get me a little bit more next month. And then Bank of Nova Scotia, again, taxes were taken out of that 97 cents that I received in dividends, so I actually had 83 cents to reinvest back into BNS, which got me 0.015 of a full share. Again, not very much, but it's more than what I had, so I'm grateful for that. And then the company that I just purchased is NEO, stock ticker NIO, or NEO. I'll get into more of why I invested in them, but the new purchase of NEO cost me a little over $200, and the purchase share was just over 3 shares, so 3.603. So now I want to talk about my recent purchase of NEO. Some of you who know what NEO is may be asking, why did you purchase them? They don't pay a dividend, and this is actually a dividend investing channel. Well, there's 3 reasons why I decided to invest into NEO. One, we have to look at the dividend stocks versus the growth stocks. So with dividend stocks, obviously that's going to make up the majority of my portfolio. And the reason why I'm sharing this, it's to build my wealth. But with growth stocks such as NEO, these are stocks that I feel are going to grow over time. So I purchased NEO because I feel like they are very undervalued. They're very immature in their growth phase, and I think they've got a really good shot of doubling, if not tripling, in the market in the next 4 to 5 years. And the second reason that I bought them was they're very comparable to Tesla. So Tesla is more mature in their development. All of us pretty much know what Tesla is and where their stock's at and how much it's grown just in the last year. But NEO is very comparable to Tesla. And the last thing, or the last reason why I invested into NEO, is that I can take my capital gains from NEO after it doubles or triples the way that I think it'll grow. I'll take those capital gains and actually reinvest them into a dividend company to make me more dividends over the time. So say, for instance, if I take that $200 and I never invest in NEO again, it doubles to $400. I'll just take that $400 and reinvest that into a dividend stock that's either underperforming for me that I think will do better in the future, or I'll invest it into, say, a VOO or a VYM. So those are my plans, and that's why I decided to invest into NIO. So let's get into what NIO is exactly. So NIO is an automobile manufacturer headquartered in Shanghai, China. They were founded about 6 years ago, and they specialize in producing electrical vehicles such as Tesla. So back in 2016, they were granted permission by the California DMV to test their autonomous vehicles on public roads, which at the time were level 3 and 4 autonomous vehicles. There's only 5 levels to autonomous vehicles, 5 being fully autonomous. So level 3 and 4 at that time were big deals. Today, they currently have 4 car models that are in production and have built just over 140 battery swap stations across 64 cities in China, I believe. They also perform close to 1 million battery swaps for customers, and their swapping stations say that they can actually swap a car battery in just about 5 minutes, which is incredible. So with those facts about NIO, let's get into why they are a buy rating on most of the analyst stock scanners. So one, let's look at the EV market first. Right now, the only big players besides Tesla in the EV market is NIO, Lucid, and XPeng. You may be saying, well, what about the other larger manufacturing companies like GM, Ford, Toyota, Volkswagen, or even Honda? Well, there are many reasons why they aren't really jumping to the front of the EV line right now. One, they have way more resources to dedicate to the EVs than what Tesla and NIO have, so they're not pressed for cash like Tesla and NIO are. Two, because they're already making up such a large percentage of the auto industry, they're not pressed to move into the EV world ASAP. So think of it as this. They're working on their own technology, but also watching to see what Tesla and NIO and all the other EV companies are doing so that when it comes time, they can perfect their own products. When the time comes, they can reveal as a much more put together product and produce it at a higher production rate than what Tesla and NIO do because they have the infrastructure in place for the manufacturing, not necessarily the EV manufacturing. So what NIO and Tesla have over the larger auto companies is they don't have a production, or is that they do have a production line that's designed to produce EVs. The other auto companies, like I mentioned, have to spend millions of dollars to re-engineer their production lines so that they can properly produce the EVs at a high production rate. So this will take many years, or at least a few years, to perfect that, which gives NIO and Tesla and XPeng and all the other EV companies right now that advantage. So looking at number 2, their current success. With China's market being about half of the global EV market today, NIO has the biggest market share in China currently. So that says that NIO is doing something right over there. NIO also had December reports coming out in the next few days, but over the past year, we've seen an increase of about 110% in delivered vehicles from 2019 to 2020. In China, having such a solid infrastructure in EVs, NIO has the potential to grow even more over the next few years, especially if the U.S. continues to grow their infrastructure in EVs. So the next item on the list is looking at their future development and upside. I've already mentioned that NIO is at the top of the EV market with Tesla, and that it'll take a couple more years for the bigger auto companies to find their way into competition for the overall EV market share. The bright side for NIO is, one, as they continue to gain more popularity in China and the US, their sales will continue to grow. One area I'll be watching is NIO's development of the solid-state battery pack. With development of this battery pack, it's said that their EV cars can travel more than 620 miles on one full charge. That would be amazing for the consumer. And number 2 is the increased infrastructure around EVs. So China and the US continue to grow their infrastructures, and NIO already has the majority of that market share in China, like I mentioned. A recent Yahoo Finance article suggests that with improved infrastructure, the increased desire to buy EVs, and the overall EV sales growing at a higher pace than expected, NIO set up for future growth. This, however, is all dependent on their continued development of their batteries and their capabilities. So to sum it all up, among those reasons and other minor reasons I don't want to waste time in this video covering, this is why I'm very bullish on NIO. I actually anticipate it growing to about $100 range in the next 5 years, and that's why I decided to invest in them. Not because of their dividends, but because they are going to grow way more than what dividends I could receive in the next few years. So that's why I'm deciding to invest into NEO now, and how I plan to take that capital gain and reinvest it back into my dividend portfolio after the next 3 to 5 years. Next, let's take a look at the overall portfolio summary and performance for January, as well as the aggregated 2021 summary. 2021 is just going to be for the month of January, so not really too much to update here. So looking at the January performance summary, I have received a dividend of $1.97 for the month. My portfolio dividend yield actually went down to 3.62. It was about 3.76, I believe. And then the portfolio value increased to $4,758.19 to end January. And then looking at the 2021 overall summary, again, the overall dividend that I've received in 2021 is $1.97 because we've only had 1 month. My top 5 holdings are still AT&T, Microsoft, Coca-Cola, 3M, and PepsiCo. And then the portfolio value has increased $163.68 for the year. Again, those are little numbers to a lot of people, and the reason for this channel is to show that the everyday investor can build wealth over a longer period of time, especially if they don't have the cash to dump into their portfolio. So that's why I'm doing this. But it's going to show that with increased time and focus into portfolios, your wealth can grow, and that's what the aim of the channel is for, and I hope that it helps people along the way and motivates them to invest in the market. So lastly, let's look at the overall portfolio. So looking from left to right, you can see what companies I'm invested in. The only new company to this sheet is NEO. So you have their logo, their ticker symbol, and the sector that they are in the market. Looking at the portfolio value column, you can see at the bottom, the value of the portfolio is currently at $4,758.19, and I'm getting a passive annual income of about $172.11 at the moment. Next to that column is the percentage of the portfolio. So again, the 5 largest companies that I'm holding in my portfolio are highlighted in yellow, and then their dividend yields off to the right. I highlighted the cells in green if they have a 4.5 or higher dividend yield. And then the 2 companies in red, NEO does not pay a dividend like I mentioned earlier, so they're highlighted in red for 0%. And then Walt Disney, as many of you know, is not paying a dividend at the moment, but I expect that to change in the next few years. They're still a really great company, and I'm going to continue to invest in them if I have the resources to, just so when they do start paying a dividend, I'm ready for that payout. The next columns on the right hand side that are in blue, those are just miscellaneous information for me. And looking at the amount per share, the only cell that's highlighted green is AbbVie. They just increased their amount per share to $1.30 for each share. That was just recent, so I decided to highlight that in yellow and go over that a little bit. And then off to the right, you can see the X date and the pay date. The cells that are highlighted in green are in the current month, so Apple has their X date, and the cells that are highlighted in yellow are the March X dates. And then the pay date, it looks like I'm going to get paid by 7 different companies in February, so that'll be pretty nice. And then the beta off to the right is just the companies that are a little bit more risky, NEO being the more risky stock in my portfolio. But overall, my dividend yield is at a 3.62%. The overall value is just over $4,700, and my annual income is about $172.11 for the year. So that's an overall look of the dividend portfolio as of January 2021. I promise I'll continue to get better with the audio and the video editing, but in the meantime, leave a comment if you'd like to see me do something different in the next video. Also, remember that with a like, subscribe, or follow on Twitter, your page will get a shout out on my videos, so please do that if you want your channel to have a shout out. And with that, this will end the video. I appreciate you guys taking a second to watch the video, and have a great one. Please leave a like below and give me a follow on my Twitter for more updates on future videos and content. Hit the subscribe button and leave a comment below if you like the video. Thanks again for watching and have a good one, guys.